Hello guys! The first half of this year has been really good for equities, and we have a probability to hit all-time highs for the S&P 500 and Nasdaq even this year. So bear in mind that the S&P 500 is just down 7% for their all-time highs, when the Nasdaq is down 15%. So there is a probability, but if you want to look into our outlook for the second half of this year, tune in. First, we want to talk about the first half. So S&P 500 is up 15%, while the Nasdaq is up 31.5% this half a year. So this is really good. I do believe no one was expecting that the broader market has been really good. So in the beginning of the year, I made a video with my outlook, and we have predicted that inflation will ease a lot. We have predicted that inflation will be around 4% around June, what it happened. We have predicted that the US economy will their growth will be slowing, and that happened. We even predict a small recession, which is not happening at the moment, but there are a possibility in the future. We have predicted that the Federal Reserve will be close to the end of their rate hike cycle. We have predicted that the rates will be around 5.5 to 5.75%, which we are really close at the moment, and the market is predicting that the Fed will hike one or two more times, so it will be around our prediction. But we didn't expect the strength of the broader stock market. The stock market is recovering a lot, and that is because big tech has been growing a lot. Maybe artificial intelligence has been maybe in a bubble, but we'll talk next. So I know most of you guys doesn't have time to read all the research that big banks and other firms publish, but I try to read a lot, and the key takeaways I take most of big banks are saying is that good news is that we think that the bear market is over. I don't think we'll be going to the bottom of last year. So even though this is not a bull market, or cannot be a bull market, I do not expect the market to go down lower than we have experienced last year or in the beginning of this year. So that's a good news. The bad news that this is probably not a bull market yet, but we can predict the future. So I do believe there will be problems in the future, economy slowing, but that can be good news as well, since we are expecting a soft landing at the moment, and the economy has been really good. The labor market has been incredible, so which is bad for for equities and inflation, but that's good news for the economy, I believe. So our leading indications at the moment, the US stocks and economy, our leading indications are weak. Price size signaling lower inflation, which is good. Labor market is incredibly strong, as I said, which is good for the economy but bad for equities. This surge on equities is because maybe a lot of big tech and the AI stocks can be a bubble. We have seen valuations going to the moon, and it's been difficult. So if you look into the forward P of the S&P 500 at the moment, the large cap S&P 500 is trading at around 19 forward P, which is maybe around fair value if you looking into good news in the future. So markets are pricing, in my opinion, is pricing a soft landing, 0.25% hike on the next Fed meeting, and the Fed cutting rates in the next year. So when you look into it, my conclusion is that small and mid caps are really cheap. They continue in a bear market, and this increase in the S&P 500 and Nasdaq is mainly because of big tech. If you look into the S&P 500, the S&P 500 is up 15% this year, but if you look into the S&P 500 equal index, where all the 500 companies have the same weight on the index, the S&P 500 is only up 3%. So this is because big tech, large caps are responsible for most of the gains in this first half of the year. Look at this graph. This means that this is the difference between the S&P market cap versus the equal weight index. If you look into it, the S&P 500 is doing better than the equal weight, as I've said. So this increase is mainly because of big tech, Apple, Microsoft, Google, Amazon, Nvidia, especially Tesla. They are impulsing the broader market. So is that big tech overvalued? Maybe. I do believe some companies are overvalued, others are around fair value, others are undervalued. But if you want to know more about it, you have to follow our channel. So please subscribe. So what that means, when we have a big overperformance of big tech, that means in the future, or in the next few months, they might not be the best companies to own, because they might underperform the rest of the index. So maybe we can find value at the moment on small caps and mid caps. I do believe there are a lot of opportunities out there. I do believe small caps and mid caps are cheap, and you can find really good opportunities out there. That might be because of the AI bubble, I don't know. So what should we do in the second half? I do believe the market is up a lot, but small caps and mid caps and most of the companies in the S&P 500 are lagging. So I do believe it's really good to continue buying that companies. My strategy for the second half is that continue to buy good companies at reasonable prices, maybe being patient, waiting for better entry points on the companies I like. But in my research, I'm looking to a lot of companies, and I can still find good opportunities. In my portfolio, there are still companies I rate them as a buy rating. They are still really cheap when we look into their qualities and into their valuation. So I don't know if the market will continue to go up. I really don't know. I do believe we can hit all-time highs, which will be 7 or 8% up from this moment in time for the S&P 500. I do believe we can be down 10% more or 15%. We can lose some of our gains this year. I don't know. It will depend on a lot of things. I do believe the next quarter will be difficult for companies, but we are close to the end. I do believe the economy will improve in the next few months, and in the next year I continue bullish on the US economy. I do believe we can find good value in small and mid caps in the US, and I continue to believe that there are a lot of value on China equities and in Brazil as well. So I might do a video in the future looking into my portfolio and into my favorite companies and the companies I own at the moment. So full disclosure, if you want a video like that, please write in the comments. So that's my outlook for the second half and our recap of the first half of this year. So I do believe we are in a good point. The economy is improving. We are close to the end of the rate hike cycles from the Fed, and news of the market has been really good. So we have a lot of things to be bullish. So that's our recap, guys. I hope you find it useful, and if you like it, please subscribe. Bye.